All right, so a lot of speculation is going to be in industrial. This is based on other filings and them kind of changing the weightings of industrials in the portfolio. It's expected to be a top 15 holdings. Does it matter to you? Does it matter to you what company it is, what part of the industrial segment it is, and to the other members of your club?
Well, it obviously matters because we follow what Berkshire Hathaway does very closely. There are lots of options, though. You can try to sort of track which stock it is, and we have some inside bets going. We think that Caterpillar looks like a good opportunity. There are some other options as well, but the big opportunity really is to follow industrials. And Warren Buffett does this. He's very close to taking advantage of what's going on in the whole country. There's $1.2 trillion that's going to be spent on infrastructure, so he's capitalizing on that.
All right. So you brought up Caterpillar. You say that's one possible option, but generally, Warren Buffett's a value investor. So are you coming up with Caterpillar because you feel like it's undervalued, or does it trade at a discount to the market? And if Caterpillar is an option, what are some of the other options that you think it might be? I think people are just interested because there's always that, quote unquote, Buffett pop. Even though he's taken a step back, the idea that when Berkshire Hathaway buys something, it must be a good buy and other people are going to pile into it.
Well, there's Caterpillar, there's Honeywell, there's UPS. There are lots of alternative options, but one good way to capture this upside pop is to just invest in an ETF. So you can invest in an ETF in industrials, you're going to get the pop, you're going to get the additional increase that's going to follow, or you can try to pick the stock in advance. Either way, we recommend buying it and holding it for a long period of time.
All right. How do you guys reading the fact that this might be a $5 billion investment? That's a lot of money, but relatively considering the kind of, people call it like a cash hoard or a cash pile, just the cash that Berkshire Hathaway has. Last read, almost $348 billion. It's kind of a drop in the bucket. So do you think this is a significant sign of the strategy going forward as we go into the Greg Abel era and Warren Buffett continues to take that step back?
Well, it looks like it means that they're buying something. They're getting ready to buy. They're doing their analysis. But we think that he is holding cash because he has lots of other opportunities coming up down the road. One, for example, might be what he's going to need to do in the railroad space. So you got to have cash to be prepared to remain competitive. If he has to make a move in the railroad space, it's going to take a significant amount of cash. So the $5 billion is going to look insignificant compared to future decisions that we might see.
I just want to clarify. So you think this is part of a trend where now that Greg Abel's taken over, Berkshire's going to get back in the business of buying after 11 straight quarters of being net sellers?
Well, it's possible that they're going to do that. And the fact that they haven't bought back their own stock in a while means that they've got a lot of cash on hand. They're overvalued right now. So we think that, yes, they're probably going to start looking at buying. And that's what they've been hoarding all this cash for. There's been a purpose involved all along. And some of our investors are doing the same. They've been looking at R360 very carefully at the market. What are the big opportunities? That's why we do that market opportunities and risk call every month.
One last thing. So you mentioned the railroad space. Railroads are technically industrial. So it's interesting you bring it up. Also, for the audience clarity, Berkshire's also the owner of the BNSF line. So they're already in the railroad business. They're already in one of the biggest railroads already. So possibly, what are you seeing when it comes to the railroad business? Do you think they would invest in the what's going to be the combined company with Union Pacific and Norfolk Southern, or something else with their own railroad? I mean, what are you seeing there?
Well, they could do something else with their own railroad. They could buy CSX and do that combination, and then they would be one of two transcontinental railroads. And the benefit there, or the opportunity here, is because Trump is loosening up the regulations around mergers, it might be easier to do than it would have been in the past. So you would go from 4 major railroads down to 2.